Robert Butler. And Robert, while you introduce yourself and your panel, I'm gonna actually, I think a couple of panelists are missing. I'm gonna try to chase them down. But also I'm gonna start a poll. So Robert.
All right. Well, once again, I'm Robert Butler. Thanks to Marty. I'm kind of co-hosting today, but I'm also moderating this panel. Independent consultant, normally based in Austin, but currently hiding from COVID in Tucson. And I think this panel is a little different than the ones I normally host. Our title is Alternative Venture Capital Strategies, including gaming, podcasts, deep tech. So we're getting into some interesting areas. I know esports has already been touched on in this conversation throughout the event. So I'm looking forward to our discussion with our speakers. I'll let each of them give an intro, who they are, firms they're working for, and how they play into this space. And Kevin, I'll let you go first because I see that you're unmuted.
Yeah, hi. My name is Kevin Collas. So I'm venture partner at Ignite XL, which is a fund investing in pre-seed and seed in wellness and beauty, tech, and community-driven stories. So I do that since October. I'm still investing with family and friends in a wider array across enterprise tech, machine learning, biotech. What did we do recently? Gaming, obviously, media, additive manufacturing. And I was previously chief investment officer in a family office called Ocean IQ Capital, with whom I'm still doing SPV deals. Like the last one is in plant-based for a pre-IPO. So with Ocean IQ, we're doing seed to late seed in revenue, 1 million and plus, to, let's say, E-round. Last year in the biotech segment, we did ACE-linked therapeutics in PKD, Eureka therapeutics, in T-cell therapy. This year I looked closely at ATAI in a platform of application for depression, relaxation, based on psychotrop and non-psychotrop compounds. So we're doing a lot of things. We were doing a lot of things with Ocean IQ across consumer native CPG brands, additive manufacturing, machine learning, artificial intelligence. What else? Autonomous vehicle applied to consumer robotaxi with WeRide, for example, in China, or to logistic with Gatik, electric vehicle, and electric vehicle. I mean, let's say electric vehicle enablers, like Amp-Up in the Airbnb, initially the Airbnb of electric vehicles, competitor of Charge.
Kevin, that is really fantastic. So can we move
so
on?
Whatever, like, yeah.
Can we move on to the next person and introduce themselves? We don't want to just, spend all the time.
This is it. Like, basically, I spend my career mostly in strategy consulting and investment banking and asset management.
All right, we'll come back to Kevin and everybody else too with our questions. But I see IvyFON, do you want to jump in next on who you are, who you're working with, and kind of how you play in this space?
Okay. Good morning or good afternoon, depending where you are in this world. My name is Stefan Wagner. I'm the head of business development at Investor. That is a Swiss fintech company that provides B2B software, or as a B2B business that provides white labeling software to securitization vehicles. So our clients are either big banks, investment banks, private banks, or also securitization providers in the SPV space in a sense. But in addition, I also sit on the investment committee of a UK fund and a multifamily office. And where it comes back to my podcast, I also have a company that produces a financial podcast, which basically we use to leverage a lot of the investments. I'm myself a fintech investor. And I have, besides Vesta, where I'm involved on a day-to-day basis, well, I have multiple other investments.
All right, thank you for the intro. And then Marvin, I guess you're up to give us your intro and how you play in this space.
Yeah, perfect. I'll be super quick. Hopefully you can hear me.
Yep.
All right, great. Yeah, so my name is Marvin. I am a partner and board member for GameGroove. GameGroove is a family office and holding company, which actually has a lot of different gaming assets. Been in Silicon Valley now 21 years, was an operator in an e-commerce company, was an executive at Yahoo for a decade, so I come from a digital media world, and was most recently a partner at 500 Startups, which is a early stage venture capital fund. So I spent about 6 years there, generalist investor, invested in anything you want to talk about: digital health, SaaS, enterprise software, e-commerce, basically it's digital health, and did about 414 pre-seed and seed deals when I was there during the 6 years. I left there end of 2019. This year, been just advising a bunch of family offices, just joined GameGroove basically in November, beginning of November of last year. And so where I play is I'm run corporate development for them, help them with their investments, setting up a fund, and trying to figure out whether we actually invest directly into gaming companies, and gaming infrastructure companies, and as well as managing their assets. So that's where I play.
All right, that intro. I do have a set of questions that I provided, obviously with input from speakers, but I saw a headline yesterday that I want to share with the group that I think touched on this panel. The headline is: over 2.4 million people watched a Spanish Fortnite streamer reveal his in-game skin, and it smashed through Twitch records for concurrent viewers. Now, I'm not a gamer, so it took me a little while to try to understand that statement. I don't know if any of my panelists had a immediate reaction to that, or that they'd like to share, if we want to just jump into our questions.
I mean,
gaming, yeah.
Yeah, go ahead. Go ahead.
Yeah, I mean, the one thing I would say is just like, I'm not surprised by it, because gaming is sort of like the new social network, for a lot of like the next generation millennials, and you can throw millennials out there, but just like this is where, I have a young child, she's 11, and, she spends all her time on Fortnite and Roblox, and Discord, right? So just like you're seeing sort of like that is a channel where they're spending their time, not on Facebook or any other ones.
And Kevin, you want to chime in? Well,
yeah, I mean, like they've been like very, very. I mean, there's a bunch of events like talking about the metaverse, the connection between the real world and the gaming world. We've seen Fortnite organizing concert that attracted a lot of people, for example. And that's not, I think it's not a trend that will stop with COVID. There is probably some of the traction that will slow down after COVID, I'm sure, but there is structural change in the way the new generation is driving buying habits, and is connected to that world of gaming, of new media, in the Gen Y and Z generations that are gigantic and are already changing all our consumer habits.
Well, and since we're kind of on the gaming topic to start this off, and this is an investment focused event, I'm just wondering from all the panelists, other than obviously the big growth in this space, kind of where do you see the opportunity for investment related to gaming and esports? I had a conversation with one of our panelists who wasn't able to join about, do you invest in teams, or are there other peripheral plays, the picks and shovel versus trying to mine for gold? And so I'd love to hear everyone's thoughts on all of that. And, if you're playing in any of those areas. And, Stefan, since I know it's not exactly your area, but, I think it's your turn again.
Sorry, do you want me?
Yeah, if you have any thoughts on.
Yeah, I mean, I can comment from one side a little bit, which is probably I didn't mention in my introduction, but because of my original background in derivatives trading and everything else, I also help companies, for example, who provide sports betting. So historically, that was on horses and greyhounds and everything, and NFL games and anything else. but they're heavily looking into esports and how to allow betting on that one. And there's a lot happening in there, and it's because it's new and it's not as efficient as probably some of the other markets. Let's take, for example, the Hong Kong Jockey Club. It is very attractive for them to do that, but it's usually the players who have the existing infrastructure for that kind of stuff to do that. But there's definitely a huge amount of volume of betting volume going into it.
And that's betting on the outcome of a specific esports.
Yeah, exactly. The next Fortnite game, and the players can win, obviously, if they win, but lots of external people bet on the outcome of that game. Yes.
And I'm sure it's 100% clean. Either Marvin or Kevin, would you like to expand a little bit more on the esports gaming and how? I mean, I assume Marvin, with the name of the firm you're working for, you guys are pretty active in the space.
Yeah, I mean, I'm actually quite a skeptic on the esports side. So, we have we have a small ownership stake in an esports team, I think just to play around. But the reality is just like, I think it's sort of a little bit overhyped. So I think definitely long term. So, this is one of the things I learned with investing, right? In technology and any of these things is like, you can be right in regards to sort of like the team and the trend or whatever. But if you get the timing wrong on it, it's just like you're screwed, right? Like you can get 2 out of the 3 sort of like right. And if you still screw up the timing, I do believe esports is going to be a long-term sort of like play. But I think there's just been so much hype. It actually, I tend to run the other way. So I'm less bullish on sort of esports. I'm actually a lot more bullish on sort of a lot of like the gaming infrastructure plays. I'm a lot more interested in sort of like even just sort of more of like some mobile sort of like gaming studio plays. That's sort of where I'm probably a little bit more interested in, frankly. I think partly because I have some bias there because of my SaaS background as well too. So I'll be very open with my biases.
Can I also jump in here, Robert? Because I mean, just in terms of what Marvin said about e-gaming, we've seen a lot of e-gaming that's been coming out, but I don't think it's ever come close to matching the growth in general gaming, right? I mean,
nowhere close, Marty. Nowhere close.
And the number of hours. So I mean, yeah, there's no doubt it's a sector, right? So people are in it and they're going to stadiums and they're buying, popcorn and dogs, right? But it's really not the same. I mean, I know people, my younger generation of my family, extended family, they game 10 hours at a time. I'm not sure how you can do that, but they do. So
I think there's a special Mountain Dew for that gets you going. Hours. And Kevin, did you want to add any more on esports gaming?
I mean, I disagree, but I disagree with on the esport gaming. I mean, we invest with Bitcraft, who is already out of the J curve with the fund that started in 2016. I invested in Epic Games. We just recently invested with Bitcraft in Queen's Gaming Collective, which is a pre-seed platform that basically combined a group of influencer and I are combining, so a group of women influencers, a women-led company, women influencer only. They're trying to cater to this new generation and to give a voice to women in gaming, which is, they represent about 40% of the gamers. There's about, there's 2.5 billion gamers in the world today. Like either, hardcore gamers, there's way less, like those guys who are playing in esport, and we've seen that for a long time. I mean, I was playing in gaming intensively when I was like teenager up to my 20s. That was in the 80s. We were already doing competition in kickoff a long time ago. Now it's like the proportions are way bigger, and there is an invasive effect in the consumer with those two generations that are changing everything again. And so Queen's Gaming Collective is doing like a platform with influencers that they select, they manage their career, they create content, they create brand partnership, so all for women. And ultimately, they might create the first women gaming team in the world. So the guys at Beatcraft are behind 2 of the world team in esport. They're specialized in that field. It's probably the best team in investment in gaming in the world today. Like as far as I've seen. So yeah, there is like trends like this that are at the edge of the gaming and the media. There's the metaverse, there's the esport. Maybe there's a little bit of craze on the valuations, but if you look at the private valuations with people who know the segments, I mean, you can enter at interesting valuation. Pre-seed for Queen's Gaming Collective was 7 million, so it's comparable to. It's cheaper than a lot of enterprise tech. I think the bubble is more in the enterprise tech today, and I'm not the only one. There's lots of funds and family office who think that. Yeah. So
Kevin, it sounds really great. I think that it's there's no doubt that there is still space, run room in this space. So
yeah,
we're still hearing a noise in the background of a woman speaking. So if somebody can mute their mic, that would be great. So Robert, there's a bunch of questions coming through Q&A and chat. If you can address them, that'd be great. I know you've got your own thing, and also I'm going to release the poll in a couple of minutes so that the panelists can review them. So why don't you look at the
we've got
questions from the chat.
Question from the Q&A, I guess, on the gaming space. What do you think of Glue Mobile? So rather specific. I have no idea what that is, but hopefully you guys do. Any comments on Glue Mobile?
and that's mobile gaming, so there's
it's a publicly traded company.
Yeah, it's publicly traded.
Yeah, so I invest in private companies, so it's hard for me to sort of say whether I think like clearly there's enough information, sort of like look at their quarterly numbers. They're well positioned, right? And the revenue numbers are good, and I like the free to play model actually works. But like I can't comment about sort of like them as a publicly traded company. I just don't know enough. It's great space though.
Right. Fair. And then we do have a broader panel beyond just the gaming space, and Stefan, with your focus on podcast, to me it's an interesting area because I sort of rediscovered podcasts doing walks around Town Lake and Austin. Figured it'd be better to expand my mind than just listen to music. And then you started seeing the stories like with Joe Rogan getting a big deal for his podcast and moving to Texas from California. So I assume anytime there's a big deal like that, it captures people's attention. So I'm just wondering, from a podcast standpoint, is there an investment opportunity kind of directly in the space, or is it some sort of peripheral play? And, again, if you could comment on that, on how you play in that area.
And Robert, can I just jump in here 1 second? The U.S. is seeing a stampede to podcasting, right? It's remarkable. Just like and this is one of the points that was in the poll, which is that we've been told there's a short attention span of the U.S. consumer, but people are listening. Like Joe Rogan's podcast is 3 hours, right? So we have, and then if you look a lot of radio hosts, they're all moving to podcast. I said Dave Ramsey, who's one of my favorite radio hosts. I think he's great for middle-class people trying to save money. He's got an incredibly famous podcast. A lot of other people are moving to podcasting who are under threat of being shut down. So, Stefan, can you kind of talk about that and also about misconceptions that we have on media?
Okay, I mean, maybe I start with a misconception. Clearly, what has happened is that there was a lot of just people trying to get as much content as possible out there and just to swamp the availability out there. And that was basically, I think, mainly as a defense mechanism to push any negative news about them down. But clearly, after a while, I think quality has basically come to the top again. And you see this with these longer podcasts where billing people, you can manage actually to engage this. And I mean, let's take, for example, G0 with Ian Bremmer. They're clearly going down that road of providing some very high quality in that space. And if you want to go down that road as an investment idea, then you basically need to think about your overall as a media company and not just as a podcast producer. You need to own the whole chain and do everything. And the main reason why I found people, why they're using podcasts and why it's so efficient for them is that it allows them either, we have used it for fintechs, but we also have used it for investment banks, we have used it for fund manager, is that it shows their overall domain business knowledge to the people, because you get an overall view around a specific topic. It often opens actually doors that are otherwise closed to you as a business because you come in much more friendlier. I want to do an interview. I think you are a knowledgeable person. And you in that first time, you find out that actually there's probably a synergy between the person who is interviewed and the person who wants to conduct the interview. And obviously, when you show your business knowledge and your domain knowledge, you build not only visibility, but you build trust. And if you then think about it, where you want to take it, it's a little bit, you need to make a decision if you are in a, call it B2B business. I call that, let's say, anything you're selling to other businesses, or let's say if you're an investment manager, you are targeting high net worth individuals or institutional investors, or if you're more in the B2C business where you really want to get to the individual retail client potentially out there. We focus mainly clearly on the B2B side, and there you have literally three choices. You can either try to produce it internally. I would highly recommend against it. I know everybody who thinks he has software on his computer can do it, but usually it will result in a low quality, and you need to build in your own subscriber base. Okay, you own your own content, but it's not very useful. You can either go to an external provider who produces it for you, clearly better quality. You own the content, but again, you need to listen up to buildership. What we have often offered and very successfully is that people sponsor this podcast for a specific topic. Is it, for example, I don't know, factor investing, smart beta, quantitative investment, for example. And because the podcast, our podcast already has a very, very targeted listenership and subscribership. And because they're the sponsor for that specific topic, they have a certain influence on that topic. And that really results in it that you're getting to the person you actually want to reach with this.
And then I didn't know if, Marvin, I think you indicated you want to chime in on the podcast topic. So I'd love to hear your thoughts as well.
Yeah, I think like podcasts have been one of those booms, right? And I actually think podcasting, so I invested in a company called Curious, which is basically takes a lot of like news stuff and turns it into sort of like audio clips. So they work with like Financial Times, Economist, and other ones. And that has been actually driven by, the growth of things like Alexa platform, Google Home. So you see a lot of these like voice devices, so you can actually listen. And that's actually just the next UX, right? If you think about the voice side. I also invested from a media specific side, the purpose of this panel, a company, for example, Blue Wire podcast. And so what they do is they basically built this network. And I actually think you either become sort of like more generalist, like a Joe Rogan, or you become sort of like very, very specific. So Blue Wire is a network of, local, regional, and national sports podcasters. And so I think if you take a look at how media actually works, like you have big journalist players, and you actually end up having sort of like very, very specific niches, whether it's like in finance, like David Ramsey, or like sports. And so I actually think the niche plays are the ones to actually go after, not news, but actually the niche plays in podcasting. And I also think sort of like if you could invest in podcasters and creators, and I think you're going to start seeing that, right? Very similar to sort of like esports and teams. I do think like you're seeing this creator revolution, and I do think you're going to start seeing sort of like studios actually just like find these creators and be able, just like an esports team, to be able to sort of like invest directly in them and share revenue streams, get them set up. Very similar actually what Blue Wire has done. So I do think that's a little bit of an alternative play.
So it's great to get your feedback on that. But what again, I just want to get back to the question is, I mean, in last year, Joe Rogan got his $100 million contract, and this thing called Quibi, I think, failed. right?
Yeah, I mean, there's so many reasons for that, right? Quibi was overfunded, and it was two boomers trying to produce content for a bunch of millennials, and they just didn't understand. Like, there's so many reasons. There's so many reasons they screwed up there. And I think Joe Rogan, he's been at this for, this is one of the things with these creators is that he's been at this for like 10, 12 years, right? Like he's been doing this for a
1,000
long
episodes,
time.
content, right?
Yeah. I would argue he actually probably left a lot of money on the table, because I actually think he has enough of a brand name where I think he took the cash now, but I actually think if he actually just, actually got his members to basically, or his followers to basically like pay for like some subscription fee, he'd actually make that back like within like 2 years. And so I actually think he left money on the table, frankly. Anyways, just my opinion.
Maybe you can get a appearance on his show and discuss that with him about
and not that well known, but I mean, there's a whole bunch of up and comers, right? Like David Perel, Anthony Pompliano. Man, if I could have a stake in Anthony, I would do that, right? Like, he's building up his own sort of like little empire around that. And so I do think there's a play there.
Yeah, there's a play in like in investing in like our platforms that are doing a little bit like Queens, combining people in the podcast industry. Yeah, there's a play at one point that will happen. I mean, I never seen that yet, but yeah, because investing in single podcast is really tricky, so you need to diversify across a roster.
Well, I saw a question come across about challenges of launching, I think it was a multiplayer game platform during the pandemic, and they talked about I think it was a cyberpunk.
That was a disaster. That was a complete disaster.
But I'm wondering if we can broaden that question for all of you guys. So challenges during the pandemic on launching either a podcast or a game, and obviously some trends accelerated, but there's been some downsides as well. So I'd love to hear kind of both, either gaming, esports, podcast, kind of the whole spectrum that we're covering.
I have a good example for that. Like we looked at Green Park. So Green Park was founded by a bunch of guys, including founders of YouTube. Big valuation, Silicon Valley club. And their concept is basically they have a fantastic gaming ecosystem platform, a sort of series of game like to enhance and like it's basically connected with live gaming, and to create some audience animation and audience engagement in between with games, with contests, etc. It's called Green Park Sports, and so the core of their business was kind of doing that bridge between the game, animate between the games. So that was all, they had to sign like the NHL, NBA, etc., which are all investing in gaming, by the way. I mean, I just introduced like Queen's Gaming Collective to the NBA recently. We have a call next week. It blocked kind of their valuation craze, because there was that was like a pretty high valuation, and investors came in and start discussing, since all the leagues were in lockdown and postponing for a while progressively at that time. Their valuation was slashed in two. So so I didn't invest in that because I was concerned about this, and it's not clear, but I mean they have a very strong product, so recently they had some big partnership with notably the NBA.
And then Marvin, any comments, I guess, on the cyberpunk situation?
So I think what the cyberpunk sort of like situation shows is that it's just very, very hard for a gaming player, studio, whatever, to launch a game sort of like across multiple platforms. If you look at sort of like just I'll explain, give you the macro, just like why I think like gaming is so unique, unlike a lot of other technology platforms is for example, like when in tech, in most tech, usually when there's a new platform, they cannibalize each other. That actually doesn't happen in gaming. So for example, the players are very, very big in console, like Sony, Nintendo. Console continue to grow. That actually hasn't disappeared. When PC came, PC didn't actually cannibalize console. When mobile came, mobile didn't actually cannibalize like the PC, right? So you go down the list and look at Niantic and AR, that is actually sort of additive. So just like the gaming overall as a whole has actually grown versus say in most tech, where each platform with new platform, there's new players that basically kill the old players. All these incumbents grow. And so what we've seen in general is just like how these players are able to get into new areas. So I'll give you an example. Like social gaming, right? Like Zynga was a major player in social gaming. Wasn't that strong in mobile gaming? They did it through acquisitions. Same thing with Blizzard. Activision was a PC player. They actually they bought like King, if I recall correctly, which is a very, very strong sort of like mobile player. So it's very, very hard. Like the expertise that you have in one platform actually prohibits you in actually growing in a sort of like a new one, right? And trying to build for these multiple platforms is incredibly challenging. And so that's actually what makes gaming very, very interesting. And so why there's a big play for cloud, for cloud gaming right now. Google, Facebook, all these players are trying to go after it, or VR, because we know that there's going to be a new major player. It's probably not going to be an incumbent. It's going to be a new player most likely. And so that's actually that's actually what's interesting these days in gaming, and trying to figure out who that player is. At least in my opinion.
I mean, in gaming, there is something that changed completely the ballpark. It's two engines. It's Unity and then Unreal. That changed the ballpark completely. I mean, I've been playing video games since the 80s. I never seen anything like what Epic is able to do with Unreal today. The texture, the lightning, I mean, it's very, very close to reality. That's incredible what they've been able to do. And those players who have that engine superiority can go way beyond gaming. It goes already way beyond gaming. I mean, there's like animation, corporate relationships. I mean, like there's way more revenue streams because of that, because the gaming revenue streams are always been tricky. It's like investing in a movie, or at Ocean IQ we had like royalty investment with a company called Blue Eye Studio. It was doing fine, but it's cyclical, and it's always difficult to launch a game. It requires a lot of money, a little bit like a movie. So it's tricky when you have like another layer like this of technology underneath. Is way more reassuring for investors. You have other revenue streams. That's way better. So in mobile, they have that. And the games that we're playing today, to be honest, are the same that I was playing in the 80s. So it didn't change that much. Those are like franchises that exist for a long, long time, that attracted massive gaming, and the massive gamers are doing the same type of game. Like
Hey, Robert, I think we're talking about this topic and great, but what I really want to get to is like the meat of this, which is, where does deal flow come from? How do you meet people? What are your timelines for investment? What are expectations for investing? Et cetera. So why don't we get there?
All right. Well, I guess to follow up on Marty's question, so we're all excited about podcasts, gaming. We want to invest in the space. How do you guys, source the investment opportunities? And I think there's already been some comments that, some of you are focused more on the private side. There was the question about the public company. So we'd love to hear about, the sourcing, evaluating, and, thoughts on the valuation differences in the public and private market. And I think, Stefan, it's up looks like you're up.
Yeah, okay. Let's speak a little bit more sort of about on the media side, the podcast side. I mean, I usually you basically find these people already on some of these I usually only when I do get involved with some of the investment side on the side is because people develop this very specialist brand already, and they're basically up and coming, and it's usually very it takes a long time for them to build this brand. You have to watch them. It's a little bit like musicians, they need to first hone their game in some dingy little back rooms where they play music until they become very good, and then you need to get involved in them basically. And obviously you need to do your homework, particularly on the people as well, how much depth there is, because even that it takes very, very long time to build a brand around a particular person, which becomes very valuable, potentially, it is very easily destroyed. So to be very harsh, we do quite a bit, and we do this actually across everything of my other fintechs as well. We heavily do background checks on the lead management team in a sense, very harshly. If the person is willing to lie to his wife about his mistress, he probably doesn't have no qualms about lying to his investors as well. That's very hard.
We had several presidents over the years like that.
Yeah, so so we really go in that depth, my partner and I, and then we basically trying to find ones where we clearly have our own domain knowledge and can help them leverage it in getting it out. But you literally have to monitor a lot of things, and it helps if you like it and understand it.
And then Marvin or Kevin, you want to follow up on how you're, looking for investment opportunities in this space, on the sourcing, evaluating? Are you doing deep dive background checks on the individuals? And I'm kind of curious too, since we're talking basically about a virtual world and we're all on lockdown, so you're not going to meet people in person. You hang out in a chat room to talk about things, and that's how you source the up and comers?
Yeah, so we do it two different ways, and we treat it, they're basically VC investments, right? They're venture capital investments. And so the whole cycle is it's 10 years, right? And so it's very, very different. But we also have it's a holding company and so it's a studio holding company. So I think there's different timelines. So for example, we just recently put in, and this is public, like $25 million into a new sort of AAA game called Godzilla, and built out the whole team. And in that situation, we expect payback probably 5 to 7 years from now, but we have completely built out, hired engineers, designers, everything like that. And we're also looking at for example, I have friends who are other VCs, other, sort of good gaming VCs, and have a network as well too. So you get a lot of deal flow from those folks, right? I've been in the Valley for 21 years now. So a lot of my friends are VCs, have a lot of, gaming friends. So you just talk to a lot of people and leverage a network, and hold period for that's like I said, 8 to 12 years, because I'm typically investing in the pre-seed and seed side.
Yeah, I mean, for me, the deal flow comes from a lot of people. Yeah, obviously there's VCs. We have a regular call or friends. We exchange deals. There's corporations that are doing stuff in the field, like Adidas, that are looking at digitization stories, that are looking at audience and consumer audience engagement. There is leagues, like the NBA has the 2K league, and they're looking for stuff. So they send us stuff, we send them stuff.
Hey, Kevin, what? So how much dedication does any one large organization have to their gaming participation? Does the NBA have a group, like a marketing group, committed to gaming? Or...
The NBA has a 2K league, and they invest and partner with gaming. I mean, the last one was Green Park Sport, for example, where they did a long-term partnership with them. But yeah, they are very active, and other leagues are getting very active because they need the engagement. Problem of the league is that they have aging populations. They want to tap in that generation because they know there's two waves that are gigantic that are coming. I mean, there's one that is already there, and they're in the peak year of revenue already, and the next one is even bigger, and they want to get those people. It's like the brands wants to get those people, but I mean, like the young generation are thinking really differently than the previous generation. They are acting differently, they buy differently, they have different values. Everybody is struggling to try to understand those new generation and try to tap them.
That was actually one of the questions that we asked in the poll, which is like, you know, how do you divide mind share? So there's all these new alternative medias, and then there's the old media, and is that in decline, dramatic decline, substantial decline, or is there some way of the fusion of the two that, you know, they can be sustaining?
I mean, the old media are still doing okay. I mean, the ones that adopted the digitization and are producing quality content, they won't go away. They're still there, and the new media wants to collaborate with those guys. The Condé Nast, the Tribune, like. I mean, like big, good newspapers all over. Of course, good channels. Yeah, I mean.
Yeah, I mean, Marty, I have a different view. I actually think that you know, like unlike gaming, new sort of like channels actually cannibalize old media in general. We've seen that, right? Like print, the business of print is completely fallen off the, completely fallen off a cliff. TV is going to happen soon too, right? TV advertising, right? Because that business, the main business model for most, for most media is actually advertising. And so the money actually follows engagement. That's the reason we look at in digital ads. Most of the money is going to Google, Facebook, and Amazon, right? Like, and everyone else is being cut out. And
yeah,
so
but I mean, it's like
yeah.
it's like retail. It's like retail. It's like a lot of things that new technology are disrupting. The good players are not going anywhere, in my opinion.
Sure.
Yeah, the ones that are agile, that are listening to their communities, that are moving fast, that are adapting, they will be there and they will adopt the trends. But yeah, no, of course, there is cannibalization at a certain level, yeah, and that's going to grow.
My share of old media is in decline. But again, I want to get back to the point of product placement, which is a huge revenue thing for gaming and for podcasts. I mean, I'm not really much of a podcaster, so I do listen to Joe Rogan once in a while. And I notice he's got 5 minutes of commercials before every 3-hour segment, right? Or in the middle of the segment, right? So it's advertising, but it's actually new also as well.
Yeah, I mean, but the issue, I mean, the general issue, if you look at total advertising going into, advertising area I know really, really well, media is an area I know very, very well. Like there's a lot of engagement in podcasts, but the ads, there's a huge lag time. So you haven't really seen the monetization actually really happen on the podcast, except for maybe, like I said, Rogan, Tim Ferriss, and a couple of the top guys and gals are able to get most of the advertising money. There's no easy way to monetize right now. And I actually think what's going to happen, with the way media is going, is that you're going to see the monetization model move away from advertising and move more towards subscriptions. And that's why I'm excited by like platforms, for example, like Substack for like newsletters, right? Like I think that's a precursor for a lot of media. If you look at New York Times, they make most of their money not from ads, but from their subscriptions.
And Stefan, did you on the podcast?
Yeah, I mean, I can only echo that. I think the subscription model is definitely coming back in a sense, versus what everything was free and it was advertised, financed. I think obviously everything has become much more on demand. That's why if the TV is on and you have to watch at that point in time, it's getting more and more back. But I think what I'm really surprised about, because we can analyze our sort of who's listening to it and we're getting obviously feedbacks and other things, is I'm surprised how the younger generation is actually how much politically they're interested in and even to a certain sense, even financially interested, which I would have said at the same age. And when I was that age, I was not at all. So while some people say, it's, they only want very quick things, tic-tac, everything else, it's actually, they're very engaged and discuss that very much between each other, even from an age on 12 years onwards. And I think
politically, I mean, is there actually data that supports that?
I can only little bit see what, in a sense, my own kids do, but we can see it on the financial side for my podcast that we are producing, actually. What we got feedback back from Facebook or other people who have approached us is quite fascinating how some people, anyway, say starting from 14, 15, 16 years onwards on, are willing to engage and listen to it and come back with questions.
And the new generation is putting money, is the kind of the first generation to do that. They really put money in companies that are following their values. They put skin in the game, really. So they're ready to pay a premium for companies that are following their values or that are fitting their lifestyle. And it was not really the case with the previous generation, where we're kind of balancing. We're not really, we wanted the cheapest, I mean, the best at the cheapest price, but then they don't really care. They're willing
I'd
to.
like to see like a little bit more data on that over time to see if that's true or not, number one. And number two, I think over time we live through different financial regimens.
Yeah.
You know, so probably beginning with Reagan, there was a loosening of credit, and now we have this massive credit bubble, right? So from my perspective, that credit bubble may be coming to an end. You know, who knows? But so I think people's attitudes towards money and voting with their pocketbook may change a little bit when there's not so much pocketbook left. So anyway, but
I mean, like,
what kind of returns can we expect if we're investing in a 10-year gaming venture? You know, so if you're in the venture capital space, you know, what kind of returns are realistic? I mean, is it traditional venture capital returns? Or is it crypto venture capital returns, or is it somewhere in between?
I mean, just my experience, what I've seen, and I've looked at the data, I've talked to investor friends as well too. Like it's the same as venture capital, right? Like you could, especially in pre-seed and seed, you could be getting 50x to 100x of your money. But like I said, that's why you have the portfolio sort of like theory, is that most of them are not going to be that. It's going to be maybe 1 in 10 or 1 in 20 if you're good, right? Or / lucky. At least that's what I've seen.
The 10x is like what everybody is looking at, but there's very few 10x in most investors, either the big funds or the small ones. It's very rare. So it's what we all expect. That's what we all try to do when we support our company, to make introduction for commercial development, for strategy, for hiring, for investors. But it's rare. Yeah, I mean, it's still a risky asset class.
Is the typical exit acquisition, IPO, or Australian exchange?
But it depends on the stage of
Facts.
investing. It depends on the stage of investing. Like in pre-seed and seed, Marvin, you can talk
acquisition. I mean, for us, most of the time it's acquisition, right?
Yeah, corporate acquisition. Eventually, you hand that over at one point if you follow on to private equity. That are specialized or like consumer, and ideally IPO, but it's extremely rare also.
Concerned with you know, like you talked about maybe a 10-year hold and it's a VC type investment, but obviously with technology, it's like things are speeding up so much, and you know, a game that's hot today is not hot tomorrow. Maybe a podcast comes and goes. So is there a risk now of kind of a mismatch in the structure of the investment and the speed at which the industries are moving?
I mean, one thing I will say is just sort of like, there's all this hype about SPAC, but this is actually probably one of the situations where I think like the SPAC does sort of like bring some level of liquidity, because it has taken a long time. And I think so if you look at the total number of stock market, you know, like versus 2000 versus now, there's half the companies just due to consolidation and whatnot. So, and there's more money coming in. So I think there's definitely demand. And I think that's part of the reason I think there's so much excitement about SPACs right now. And there are a lot of gaming SPACs and I do think you're going to see some roll-ups. There's a lot of private equity money out there. And so I do think, my seeking suspicion is that path of sort of liquidity will probably shrink. You're seeing things like Carta with sort of like their secondary market. Like there's a lot of new things coming into play that I think will shrink that liquidity.
Yeah, like there's platforms where you today, the Job Act, etc. I mean, we can access to pre-IPO. That's increasing the liquidity. Like those new generation, they like to do that. They can invest in Bitcoin. They can invest in pre-IPO. I mean. And the SPAC, I'm more dubious on that. I think there's a big, it's not the first time we see this kind of new things. I'm still waiting for some track record of history with that, and I think at one point the SEC will take a look at it with a close eye. So I'm still, wait and see on the SPAC craze.
Yeah, so SPACs have been around for 20 plus years, so I think the SEC's kind of worked out most of the.
Yeah, but I mean, recently, everybody wants to do SPAC, so it's.
You'll probably get a closer look. Absolutely.
There is all over a kind of excitement that is kind of scary all over.
But it's the same thing like any bubble, right? Like just like there's going to be lots of players. Some are going to be dubious. Some are going to be like really good. And so Ackman is like, I would invest in Ackman's SPAC. I'd invest in Chamath's SPAC, or my friend Kevin Hart's, like he's a very strong player, right? Or Reid Hoffman. Like there are some very, very good players, incredible operators. And so I think you just like everything, you have to be super selective and do your homework.
Yeah.
I agree on that. Let's call it creative destruction. But we got a lot of other questions, and I'm hoping that Robert can get to them. So Robert, Chris, and there was an anonymous question because the guy doesn't want to be deplatformed. So please, can you answer these questions?
Yeah. So let's see. Given the recent developments, Trump ban, election influence, etc., will we see the end of big tech? New networks, information as a centerpiece will emerge. I guess just focus on, with the recent banning of Trump and others on certain platforms and both parties looking to push back on big tech. I mean, you guys see, is this peak big tech?
Well, I think maybe another way to put it is there going to be, so there's something called DeFi, which is decentralized.
Decentralized finance.
And are we expecting the same thing to happen in big tech, the decentralization of tech, right? So,
yes, for sure. Yeah, for sure. Right. Like, and I think you're going to see this push. Like, so I was always very bullish on crypto and blockchain. And I think like this move literally this week sped everything up like, 3 to 4 years at least. And so I think you're going to see a lot of alternatives like starting to pop up. A lot of the infrastructure built actually over the last couple of years since the crypto bust in 2017, 2018. And a lot of the builders just been building sort of as the hype went out. And I actually think this sped up the interest. And so I think that this has woken everybody up to sort of like how much power, if you can kill the king, you are the king, right? And everyone's kind of woken up to it.
Well, for sure. But another perspective is I think that, again, these conservative talk show hosts are all moving to podcasts. And there's one guy whose name escapes me, Mike something or other, he's a very famous commentator. He must be 80 years old or something. And I think he's like in the top 10 radio commentators, hugely paid. He's going 100% podcast. He was like banned from going to England because he was too controversial, stuff like that, right? I mean, if you ask me, there are far more controversial things on the internet than radio commentators. And if you think about what the controversy is, it's kind of terrible. The kind of controversial stuff is rather than the limitation of free speech. So again, decentralization. Are we seeing something like similar to where people can kind of judge what their political interests are? People moving away from this old school of tech.
Yes.
To this.
Yeah, absolutely, right?
Else, right?
Yeah, absolutely. Like think about the fact that we talked about this term deplatforming, right? Like, being kicked off, like the biggest thing to look at Parler, right? Parlay. The reason they got destroyed was because like they got kicked off Apple App Store, Google Play, and actually I think the killer was actually Amazon Web Services, right? Like if you don't have Amazon Web Services, you're done. and there's no solution or option. You have to go build that infrastructure yourself. That's a lot of money. And so I do think like there's a big push to sort of find like decentralized solutions, and that is being built right now.
Right. Yeah. And we've been in the whole crypto space since 2014. So we're pretty educated about that. So that's great. Chris, you had a question also. So Robert, can you ask that?
If I can find it. Oh, okay. The digital convergence in telecom media started since 2000, almost like the space odyssey. How do you see the old and new media convergence or divergence over time in demand and supply sides? Are we going to see shortened return cycles like we saw in investing in education? And kind of open to the panel. I mean, well, maybe, related to that, with old and new media, I mean, we've touched on, you've got the big players currently with Facebook, Microsoft, and then against the decentralization, I guess, how do you guys see those different forces, interacting? Are we just going to see the big platforms buy the new up and comers, or the new up and comers going to be able to sort of, blaze their own trail?
Their acquisition, I mean, they are acquirer, potential acquirer, but like there's something that I would be willing to. I mean, I'm curious about is like there's a craze of Zoom, right? We're on it. And I wonder why the big players are who have all the assets to do that, all the team to do that, are not moving to create better products. So it's like, okay, there's this wave of disruptor, but when are they going to enter really into it? Like Microsoft did a push with Team. Apple, Apple, Tencent, Microsoft, those guys have all the piece to do something great, even Facebook, and they're not. So it's like, they have other priorities also. That's the same for many investment segments, and when they're interested in two,
Well,
still the acquisition of smaller disruptors is obviously an option.
Well, and I wonder, do you guys have any thoughts on how the U.S.-China tech war, trade war might play into this space? Because we're kind of seeing splintering and how technology is having to evolve kind of in two different spheres. So does that play into gaming and esports and podcasts? Or are you going to have, your Chinese
There've been Chinese investor backing out from the US and retiring their team. Like a lot of them, like in San Francisco, ZZ Venture was backed by big real estate company that was doing like seed. Like there's plenty like that backed out. We'll see how it plays out with the new administration, and I'm hopeful for more diplomacy in that. But Chinese investments were representing a big portion of investment. Backed out.
I think you're touching on something here, and I think that's what will drive also a lot of these things, is how will certain regulatory oversight, how will Europe handle this one? How will the Chinese handle it? How will the US handle it? So there will be different demands or requirements for doing something that way. And I think that will drive a lot. I know people want to decentralize, but if you still have to sit on the Amazon cloud or some other, let's take the podcast. Yes, I know it's on Spotify, it's on iTunes, everything, but they're only networks that point, or dictionaries that point somewhere where it actually needs to be hosted. And if somebody switches you off there, you're in real trouble, and you have to build your own ISP basically.
And there is the competition oversight, like in Europe, like there is a very strong proponent of decentralization or breaking down like the big empires. In the US, there's talks about that. There is interesting procedures right now. They're under the radar for sure. So I'm not sure it's going to destroy value in that process if we separate Facebook, Instagram, WhatsApp still have value. But beyond that, like what would break a lot of the current status quo is like the decentralization of the net that have been spoken about for many years, even by founders of actually the network. If it happened, it's going to be game changer, but I mean, it's far-fetched.
And Marty,
So,
I think about time, right? So maybe.
yes, I mean, there were some great questions on artificial intelligence and machine learning in this space, but we're not going to be able to get to it. But I think it was really great, and I'm, happy on the performance of the panel. So great job, Robert. Great job, guys. Thanks so much.
All right.